Hey traders, this is Ron Haidt. Happy Sunday. Hope you guys are having a fantastic weekend. As always, everything in this presentation is for educational purposes only. We'll kick off here using a daily chart of the S&P 500 ETF, the spiders on Thinkorswim. This was the previous high from before the Corona crash. Let's go ahead and zoom in. On Friday, we reversed off the open. So we opened, if I zoom really close, we opened at top left. We traded all the way down to here and ended up closing above where we opened. We closed practically at the highs of the day. So it looked like maybe some of the good news finally being priced in across the board. Not so much. The spiders remains bullish going into the first full week of trading here in August. Just like I've been saying before, the first sign of trouble, the yellow flag, the warning flag, will be a close below the red line, which we've done here. And that red line, remember, is a 20-day exponential moving average. We've done it here too, but we can't get through the big one. The big one is the orange line. That's the 50-day SMA institutional moving average. That's the big players, the big boys look at. We get below there, that's what goes on a full-blown sell signal. So until then, you know what to watch for on the major indexes. If I take a look at the Dow here really quickly, Dow is lagging relative to the S&P. It's not doing quite as well. We've had two straight probes below the institutional line, Thursday and Friday. But what happened in both occasions? Close near the highs of the day. So we're dipping our toe in the water, see if there's any sharks going down there, nibbling at those toes, and the answer is nope. We went right back up. There was no follow through at that point to make us close below the orange line. So no follow through to that little attempted bite, if you will. The Dow here barely, but is positive, is bullish going into this full week. We take a look at the Qs. They opened top left candle, closed or went as low as down here, and then closed back up where they opened. This is still bullish. There's a lot of volume that came in, but there was also buying that pushed the tech index back up to nearly all-time highs. Now, if I zoom in, we still have a potential double top up here. We have basically a trading range since that bearish engulfing came into play on 7/13. I would put alerts at 270 or just watch that number at 270. We close above there. That is a flat out breakout. Then we've had a multi-week consolidation, and here we go again. So I get a lot of questions, will August finally bring some selling pressure into the markets? Anybody's guess is as good as mine or yours. No one knows. All I can tell you is we're going to watch for cracks below the 20-day on a closing basis, and then here too, a close below the 50-day. That is the big one to watch. That says the bears are getting the upper hand and the bulls have lost their edge on the daily chart. All right, let's go take a look at some of the stocks that had earnings this past week. So here's Amazon. We talked about it in Thursday night's video. Now, Amazon, maybe a little bit of good news, is starting to finally be priced in. We have the all-time high at 33.44. We tried to get up there again on the 21st. We could not. We tried to get up there on an absolute blowout earnings number. We could not either. So what might be happening here, if I come in here, add a drawing, let's go ahead and do a box. If I come in here and do something like this, we're basically trading, if you will, in something like a box. That needs to be broken. If we break out to the upside, that's a bullish breakout. New all-time highs. Who knows how far this thing can go? Ideally above there, but if I zoom in, when I say above there, above 33.44.29, the open on that candle was 32.51. The open here, 32.32. The open here, 32.44. There's not a whole lot of movement, 10, 11 bucks between all these highs. So if I wanted to jump the gun early, that open right there, which is the current highest open, 32.51, that's where an alert would be. If we close above that level, it just might start running already, but above there would be an absolute breakout. Now, how about to the downside? What would it look like if Amazon would roll over? Well, it hasn't been below the red line since when? I mean, geez, whiz. We'd have to go all the way back down into the beginning of April. That's how crazy strong this stock has been. So just like the S&P, a break below the red line. 1-day EMA is going to be our first sign of trouble. A break below the orange, then the selling is really starting to get steam here. And that's where I would go into protective or protection mode. Let's take a look at Apple. Apple started to trade off its highs, and then it went right back to new highs and then some. This is part of the 4-for-1 stock split. But when you think about Apple, Amazon, Google, Facebook, some of these companies are hundreds or thousands of dollars a share now. The idea that Schwab and Robinhood and others are now making these slices, these fractional shares, much more available, much more known. This is also, like I said in the other video, helping driving these prices higher. So now you have folks that Apple's going to be It's going to be 100 and some bucks. Take 425 divided by 4 when it eventually splits if it stays at this price. That's going to make it even more affordable. And then you factor in the idea of slicing of shares. It's pushing this thing beyond what I think is fundamentally warranted, even in my book. And I've been super bullish on Apple, Facebook, Google, and Amazon for quite some time, especially with the Apples, the Amazons, and the Googles. They're after world domination. Facebook has now come to that forefront as well. Now, with the Bollinger Bands, I just want to highlight this. Those green lines are 2 standard deviation John Bollinger Bands. When you have a candle, or if you're using an OHLC bar, whatever it is, that close outside that upper Bollinger Band, that's telling you that it's an extreme condition, if you will. It's overbought. 90% of the stock's data usually falls within the bands. So when you get outside those bands, you're betting against the house. You typically don't want to do that in casino terms. You don't want, it's really bad odds to bet against the house in that sense. So if I zoom out here on Apple, just look what happens. We get outside the Bollinger Band here, and we're back in. I'll zoom in even closer. See, here, we close outside. What happens? Not a collapse, but we go from what? 287 to 270. $17 drop. Then we get out here. We start getting outside. Here it was 310. Then it was 315. Before you know it, you're almost back down to 300. Isn't it something how that happens? Here we get a surge. We start getting at 344. We get up to 353. Before you know it, 332. Quick 20-point drop. Here we puncture it just a little. Immediate regression. And what happens is this, when we get outside the Bollinger Band, that's overbought. Once we get inside, we're no longer overbought. Here we go from what? We ended up closing at what, 390, but we got as high as 397. We dipped all the way down to 357, and now here we sit again. So in this situation, I would not want to be chasing Apple based on a Bollinger Band strategy. I would want it to come back down at least to the red, at the very, very least. If it gets near there, maybe I consider going long if I wanted to. Also keep in mind that typically in September, we talk about this almost every year, Apple has bearish seasonality. It's the only time of the year it really goes that way, and that's due to that conference they have. So just be aware, you've got about 4 weeks till that hits. So maybe Apple can still keep running up until that point. And I think the share split date's right around that, just ahead of the conference too. That could actually pack a 2-for-1 punch. Because get this, folks wake up with 4 times as many shares as they had before. They end up selling some for no good reason, just because they have more shares. It's a weird thing. And then they're usually bought up by all the folks looking to buy cheaper shares. But that scenario might actually help out with the whole seasonality effect where it sells off right after that conference. All right, now let's keep going here. Here's Facebook. Now, what's interesting about Facebook is it just broke out. Let's go ahead and put this drawing in of the trading range. I could make an argument and say something like that is the range. We had that one day below, but the 50-day sort of caught it and went right back up. We broke out of the range. This is a technical breakout. Now, if I go back and look at all the weekly data on Facebook and we zoom in, what do we see? Now each candle represents 1 week. That's a full-blown breakout. So Facebook looks better than Amazon in this situation, on how they're breaking out. All right, let's move on to Google. Let's go back to a daily chart, 1-year daily of Google. Let's zoom in. Google's testing and actually probed the 50-day SMA, that institutional moving average, on Friday. We dipped below, and then we ended up closing higher. But here on Google, it is below the red line, the 20-day EMA, but it's still above the 50-day. So again, we had the probe, finished off the lows. If it breaks below the 50-day, that's going to be technically bearish. If it gets back above the red line, that's going to be technically bullish. All right, if we take a look at Microsoft on a daily chart, I had a question about this one. The way the stock rallied off the lows, it actually closed the highs of the day and just barely above its 20-day EMA. So for Microsoft, it's sort of like a little bit of a game of almost like ping pong here, back and forth, back and forth, back and forth. If we break above the 20-day a little further, that's going to add to the bullish technical picture, but it's sort of caught here in a range. I think the bigger play, the most interesting play, is if it closes below the 50-day, that institutional line. Microsoft's had an amazing run. If we close below the 50-day, the target would be back down here, at least in some of this consolidation, maybe in the low to mid 180s. Now, if it goes a little higher, that'll be a little more bullish. But look, here's a high, here's a high, here's a high. We got lower highs right now. So at the very least, it's going to need to at least take out that high. And because that high is so close to this high, I'd want all-time highs before I would feel really good about maybe a new bullish trade idea to consider. I mean, sure, it is above the 20-day. I could already consider this, hey, it tested and it bounced. Um, but I'd rather sort of trust but verify on this one. I'd actually rather see new highs or a breakdown below here because we do have lower highs in play. Now, CAT, C-A-T. This one is interesting because the heavy machinery, I just don't see how it's going to do that well unless there's going to be some sort of new project put forth in Congress or something. But below the 50-day is going to be bearish. Right now we have a high wave doji. The company just did have earnings. This is the earnings reaction, a lot of back and forth, big volume. There's a bit of a double top now at the 140-ish area below the orange. As you probably figured out, that's going to be bearish. And then we would come back down in here maybe to some support and then back down here. But right now it's a yellow flag on CAT. I want to see a breakout and then we challenge the previous highs over here. Or the bigger one, I think, is below the 50-day for a potential trade idea. And then we'll finish up here with gold and silver. Here's gold, all-time highs. This is very bullish. However, look how many days we're staying outside this upper Bollinger Band. This is defying odds, if you will, defying gravity. It's almost acting like Tesla would. It got back inside the Bollinger Band on Thursday, and boom, pop it goes. It's actually not overbought, but it is pretty darn extended. Typically, August, September, not good months for gold. Usually, if there's a rally, it usually peaks out in that time frame, and then we end up having a pullback anywhere from October to December before the usual year-end, beginning of the year run-up. So just keep an eye on gold. Yes, it's bullish. First sign of trouble, I would actually put in here maybe an 8-day EMA. We get below that, that might be the first sign something has gone wrong. I wouldn't even wait for the 20-day. But yes, it is bullish on the daily chart. It's bullish on the weekly chart. Here is silver. This thing finally got itself going. I'm going to have to go out and do a 3-year weekly. Look at that. If I go out and grab all the data on silver, look at the progress we've made. We finally took out those previous highs last week, which were around, let's say 20. We ended up closing at 21, so about 5% higher. And then we tacked on another $1.50, another 5% this past week. This is bullish. Right now for silver, there's a little bit of resistance of around 23, maybe another dollar higher. We get through that, then we start coming up to 26-ish, and then back up to some of these peaks. Silver is starting to play a little bit of catch up. This could get interesting. Staying with silver here, the silver miners, their target on a weekly basis is going to be the previous highs up there around 53. That's still almost 15, 20% higher at this stage. It is getting outside the upper Bollinger Band on a weekly basis. When I see that, I just can't chase it because odds suggest there will be down days. There will be a pullback, and then I can buy maybe into weakness if we put in like an 8-day EMA or at the very least a 20 period. Now let me change this to a daily chart. So I put in an 8-day EMA and maybe buy some at the 8 if I wanted to, maybe buy some at the 20 if I wanted to. At least it's starting to come back a little bit. All it's done is fill the gap though. This, even on the daily chart, is still bullish, but on the weekly chart, it is overbought. All right, now, last but not least, GDX, George Delta X-ray. This is a daily chart. It hits the Bollinger Band, gets outside of it, pulls back, hits it, pause, hits it, pulls back, right near that 20-day. This is not overbought on the daily. If I take you and we look at a max weekly chart of GDX and we zoom in, we took out those highs. The next peak on the weekly is up at 54, 30% higher. So there is some room to run. GDX is not overbought on the weekly. We are not outside that upper Bollinger Band. So there is your analysis on the metals. They are bullish, but please watch out. This is the time they often peak, and then we start seeing a pullback. Watch for closes below the 8-day EMA as the first sign, and then the 20-day EMA on those daily charts. Wish you guys a fantastic week ahead. I'll be back with you probably Wednesday-ish with a midweek update video unless the markets get real squirrely on Monday or Tuesday. Okay, folks, take good care.